Mark, you have been saying it's not a recession with the employment picture so strong, and we got further evidence of that today. So where do you stand right now? Negative growth and strong employment? How does that add up?
Well, recession risks are high, no doubt. In a high inflation, higher interest rate world, recession risks are elevated. But, with some reasonably good policy making by the Fed and a little bit of luck on the pandemic and the fallout from the Russian invasion of Ukraine, I think we'll be able to navigate through without a recession. And the key is, in fact, the job market, the American consumer, the firewall, so to speak, between a continuing expanding economy and a recession one is the American consumer. And as long as we're creating jobs, unemployment is low, excess saving, debt service is low. Despite this declining stock market, house prices are up, wealth is high. I think that firewall should remain in place. Consumers should keep spending, and we should be able to navigate through without a downturn.
Ken, what do you think? Do you think we can be in a recession with a 3.6% unemployment rate?
Oh, I think we're not in a recession now. Of course, the numbers are hard to read because there's certainly the output numbers falling. The jobs report suggests that inflation's not that bad, but there are other numbers that suggest it is. I think the question to me is how determined is the Fed to bring down inflation in the, say, next 18 months? How patient is it willing to be to let it stretch out longer? We're also facing a lot of supply shocks in a way we have not seen in 50 years. And that's just a lot harder take. I mean, yes, if you have a lot of luck, but the luck can go the other way. It can easily be that the Ukraine-Russia gets worse, that China, which is temporarily pulling out of its COVID lockdown, goes back into it, that other things go wrong. I think it's going to be very, very difficult to have a soft landing. So I think if the Fed tries to bring inflation down as fast as they're talking about, the odds of a recession, a significant recession, are high.
Mark, how do they achieve a soft landing? It doesn't sound like they're blinking anytime soon. They sound very resolute. Williams today, the New York Fed president, speaking in Puerto Rico on inflation. They want to do whatever it takes here. They're not pausing.
Yeah, and they should, right? I mean, if I were at the Federal Reserve, I'd be saying the exact same thing because they have two objectives that are very achievable, and so far so good. The first is keep inflation expectations anchored to their target. And they've done a marvelous job. I mean, by talking tough and the aggressive actions they've taken to date, those inflation expectations, the bond market measures expectations, the one that really matter for Fed policy, they've come all the way back in. They're very consistent with what the Fed would like to see. And that's critical to getting actual inflation down into the place where the Fed wants to see it. And the second thing they need to do, and they can achieve it, today's jobs report suggested, is to slow the growth rate in the economy so that you get job growth that's down to 100K, 150K per month, that's consistent with labor force growth, and you maintain a stable unemployment rate right around the mid to high threes, consistent with full employment. So, a lot of script to be written. Ken's right. There's a lot of things that can go wrong here, and sentiment's pretty bad, and any small thing that goes off the rails could push us under. So recession risks are high, but I think we got a fighting chance. Recession is not inevitable. We have a fighting chance to get through this without one.